Like many cities in America, Minneapolis is in the middle of an affordable housing crisis, and Wall Street has taken notice. One of the hottest investments right now is in single-family rental homes. A company based in the U.S. Virgin Islands recently scooped up more than 200 affordable homes in North Minneapolis, getting a deal from Freddie Mac that most home buyers could only dream of. If home ownership is still part of the American dream, North Minneapolis may be one of the last places in the city where that dream is still affordable.
It's like a massive move out.
And yet it's beginning to feel a bit like the game of Monopoly.
It's folks who currently live there not living there anymore because it's too expensive.
Where the big money gobbles up property.
They're out of town. They are focused on profit for their investors.
While most keep renting.
My rent is like around $1,500.
Never even getting to roll the dice.
In this community, those interests mean that we are often on the chopping block.
Our story begins in the ashes of the 2008 foreclosure crisis. North Minneapolis had been hit hard by predatory lenders, leaving hundreds of board-ups and vacant homes. But where most saw a housing disaster, a few began to see unprecedented opportunity. Even the nonprofits involved in affordable housing knew it would turn around.
I joked 7, 8 years ago, I joked to say, if you gave me $10 million, I know I can make $10 million by investing in the low real estate here in North Minneapolis. It was way undervalued.
A company in Atlanta, Georgia called Havenbrook saw the same thing, as it had in other cities. Beginning 4 years ago, they went on a buying spree, purchasing 400 homes in the Twin Cities. Half its portfolio, 204 homes, located in North Minneapolis, and most of those in the 55412 zip code that includes the Camden neighborhoods. Why the north side? Because home prices were very low, rents were still high, and the housing stock in pretty good shape. It was also close to downtown, a neighborhood, in other words, primed for gentrification. Not unlike the monopoly strategy where you skip Boardwalk and Park Place and double down on lower-cost neighborhoods nearby, putting up as many houses as you can and wait for someone like Michael George to land. On his block of Humboldt Avenue North, there are 3 Havenbrook rental homes. He says he would have bought his home, too, if it was on the market at the time.
Well, we're paying this rent over $1,500. Well, that's a mortgage. I mean, I want something on our own. You know, if they'd have had it on market when we first looked at it, I probably would have bought it.
If Michael George had bought the house on Humboldt for $106,000, with a 30-year mortgage, his monthly payment would be around $800, nearly half the $1,500 he's paying for rent, and he'd be keeping the equity.
They didn't give the north side here, the people who live in this area, a chance to have American dream. That's about to own their own home.
So this is a money-making model, a business model of we're going to take this house, we're going to barely fix it up, we're going to ride it out for as long as possible, and then when the market turns again, we're going to dump all the houses and make a profit off of it. And that's very, very concerning for the stability of our housing stock.
And that's what happened 3 months ago. Havenbrook, which also owns rental homes in 10 other states, was bought by Front Yard Residential, another investor group, this one based in the U.S. Virgin Islands. Front Yard bought the Minnesota homes in a package deal for $68.5 million, an average price of $171,000 a home. That's $27 million more than Havenbrook actually paid for the homes.
This is a continuation of the history of wealth extraction rather than wealth building. And honestly, that's what renting is.
The $500 million deal was backed by Freddie Mac through a pilot program for large property owners and guaranteed through a special interest-only loan. Freddie then sold that loan to Wall Street investors as securities. The next day, Front Yard's stock price skyrocketed. But that same day, the Federal Housing Finance Agency, which oversees Freddie, shut the pilot program down, citing an impact analysis that it was unclear what the program was actually doing to neighborhoods. The agency would not comment for this story.
Freddie Mac understands the impact and investment it will have for Freddie Mac. If it were about impact for the communities that are here, that would not be the type of product being sold to those equity investors, right? Because the presumption is they're already well positioned.
And they're not necessarily in the business of housing people. They're in the business of getting a profit for their investors.
Havenbrook, now part of Front Yard, will continue to manage the properties. When we stopped by the company's Roseville office, no one there would talk to us.
We're trying to get a hold of someone. You guys own a large amount of property, and we want to ask you some questions.
In a statement to the Fox 9 investigators, Front Yard said they are providing an important alternative to underserved families, that a substantial portion of families in the communities we serve are credit challenged and banks are unwilling to ease their mortgage standards and provide them with the financing they need in order to buy a home. When Havenbrook moved into North Minneapolis, there were 8,000 homes that were homesteaded and still considered affordable. But in just 3 years, the supply has dropped 20% as the market has tightened and nearly 700 units converted to rental.
In North Minneapolis, you look at the housing stock and it still looks really, really good. And I'm like, why are these rentals?
Skin color. I think at the core of it, we still have a race issue in the city.
A history that includes housing discrimination and redlining by banks. Today, North Minneapolis has the lowest home ownership rate in Minnesota. Even after 2008, more than half of all mortgage applications were denied, the highest rejection rate in the region. The City of Lakes Community Land Trust has helped 120 low and middle income people own their own home in North Minneapolis. Havenbrook is their competition.
How do we gobble up as much as we possibly can right now for the benefit of the community and make sure that there's going to be a housing stock here? Because there are parts of town right now that we're priced out of.
Like the game of Monopoly, to own is to get rich. And if you bundle all those properties together, it makes Wall Street investors even richer. But it doesn't build wealth for families in neighborhoods. Michael George actually has found a home he could afford to buy, not in North Minneapolis, but in Brooklyn Park. He had to move to find his slice of the dream.
I think they should have had a chance to have a piece of that American pie.
The rental advocacy group Homeline tells us 40% of those who rent from Havenbrook, now Front Yard, are getting some kind of rent subsidy, like Section 8. We checked with Minneapolis Public Housing, and in the last 4 years, they've paid Havenbrook a total of $4.6 million. For the Fox 9 investigators, I'm Tom Lydon.